What's going on, guys? Welcome back to the channel. This week, we are seeing more evidence that the housing market is continuing to shift towards buyers. Inventory is starting to grow, and sellers are becoming more flexible as we're seeing record levels of concessions being offered to get deals done. We're also going to discuss an important topic for senior homeowners as reverse mortgages. And finally, we're going to be looking at Wall Street as suddenly they are nervous about a massive rally that might happen. So we're going to be jumping right into it. So first up here at Realtor.com is the weekly housing trends report. So the housing inventory remains above a year ago's levels as of homes continues coming into the market. So sellers are increasingly adjusting expectations as homes take longer to sell and buyers are starting to gain more choices. So this is part of a trend that we've been discussing for months. The market isn't crashing, but it's becoming more balanced for buyers. That's a good thing. More inventory means less competition, fewer bidding wars, and more negotiating power. We're also continuing to see asking prices soften in many areas, as Realtor.com has reported months of declining or flat asking prices. So showing that sellers are beginning to meet the market rather than expectations in that pandemic era. So for sellers, the strategy has changed. Pricing pricing correctly from day one is becoming much more important. So overpricing a property can result in extending market times and eventually price reductions. So the big takeaway here is that we're moving towards a healthier housing market where both the buyers and sellers have opportunities, but neither side has an overwhelming leverage. And speaking of buyer leverage, Redfin here has reported that 46.2% of home sales in May included seller concessions. That's the highest share ever recorded for the month of May. So, if you're unfamiliar with concessions, it's an incentive where sellers offer buyers, incentives to help close on a deal. So, examples are like closing costs, buying down the buyer's interest rate, covering repair expenses, offering credits towards home improvement. So these are the reasons that matter. So simply put, sellers are competing for a smaller pool of qualified buyers. Redfin also notes that more sellers. There's significantly more sellers and buyers in today's market, which is forcing many home buyers to become more flexible. So high mortgage rates and affordability challenges continue to keep many buyers cautious. For homeowners, this creates opportunities that simply didn't exist a few years ago. Instead of focusing only on purchase price, buyers should negotiate for rate buy downs, seller credits, repairs, and other concessions that can dramatically reduce any upfront costs. So if you're actively shopping for a home, now it's time to negotiate. And now we're going to be going on to the Heckham world here. So it's a topic that doesn't get a lot of attention here, but a recent article from Heckham World highlighted the importance of safety for older homeowners and the role for reverse mortgage professionals that can play in helping the reverse community and the aging senior age. So many seniors here want to remain in their homes for as long as possible. Of course they do. However, aging in place often requires modifications that improve the safety and accessibility. Examples of this include walk-in showers, wheelchair accessibility and improvements, better lighting, handrails, and fall prevention upgrades. So the reality is that it falls on one of the leading causes of injuries for older adults. For homeowners who have substantial equity but limited cash flow, a reverse mortgage can potentially provide access to funds that may help cover these improvements. The key takeaway isn't just the financial side. It's recognizing the home equity can sometimes be used strategically to help improve quality of life, independence, and safety for seniors who wish to remain in their homes for a lot longer. And as our population ages, conversations about housing, accessibility, and retirement planning will become increasingly more important. And lastly, You guys know I like to cover just a broader market here. So, tech stocks, they're starting to get a reality check. Over the last few days, they've been tumbling a little bit. You can see here from the Wall Street Journal, an enormous rally fueled by artificial intelligence excitement has experienced a sharp pullback this week as investors became concerned about valuations and future growth. So the Nasdaq did fall more than 2%, with major chip makers and AI-related companies experiencing significant declines. Investors are beginning to question whether current stock prices have gotten ahead of actual earnings and business performance. Another concern is interest rates. Higher interest rates can put pressure on growth stocks because future earnings become less valuable when discounted back to today's dollars. So analysts are aren't necessarily saying that the AI boom is over. In fact, many still believe in a long-term fundamentals remain strong, but what they're saying is that the market rarely moves in a straight line. So when sectors become extremely popular and valuations rise rapidly, corrections may become more likely. So for investors, this serves as a reminder that diversification and risk management remains critical even during market rallies. So that's your market update for this week. Inventory continues to rise. Seller concessions are reaching record levels, and senior housing safety remains an important conversation, as well as Wall Street is getting a reminder that the hotter sectors can experience volatility. As always, guys, my name is Walter, your local mortgage expert. Whether you're ready to start your home buying journey or looking to lock in your next real estate investment deal, I'd love to help guide you guys through that process. Use the link below to get started. And if you found this page helpful, don't forget to like and subscribe and hit the notification bell to stay up to date with the latest developments in the housing markets and the trends. See you guys next time. Peace.